Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, what's going on in the markets? Well, the markets are actually closed. Markets are closed today. I hope everyone's having a good Memorial Day weekend. So the market now, on last week, we actually had a down week in the market, but you'll notice on Friday was an up day. Now, this is very interesting. It is like 80% of the time before a 3-day weekend, the Friday will be an up day, right? There'll be an up day. It's very skewed in the upward direction. Now, here's what's interesting. About 80% of the time, the day after the 3-day weekend, which would be tomorrow on the Tuesday, it is a down day in the stock market. We'll see how that plays out. Doesn't hold true 100% of the time, but it is fascinating that 80% of the time before the 3-day weekend, we get a jump in the market, and then we get the pullback on the returning day the following Tuesday. All right, so we're in this topping pattern. We're trying to get over the 40,000 level on the Dow, right? And they're going to probably take another run up at that. But I think that once this comes down below the 20-day moving average, that'll be a time to take a shot on the downside. Now, this market has been straight up, right? Since last October, we just rallied, and we've had a really strong year so far, but this could all be washed away. We'll see how it happens. A lot of people think it's never going down. They're going to continue to print the money. We have an election year. We're only going to go up from here, and maybe the Moon Boys have it right. I don't particularly agree with it, but the direction right now is still upward, right? As long as you stay above the 20-day, we're going to be moving higher. Okay, let's get over to the real estate market. Now, the real estate market, like the stock market, people think that the real estate market is never going to go down. There's never going to be a correction. Never going to be a drop of 40% like Tall Mike predicts in the housing market. We're just going to keep going higher and higher and higher. And they're going to do this with printing of funny money, really, right? Maybe Biden will come out and maybe he'll forgive all the mortgages. Why not? He's trying to forgive all the student loans. Let's just forgive all the mortgages. That would prop the houses up, right? I suppose that's a possibility. I don't really think it's going this way. See, my take's a little bit different. I think housing right now is a trap. It's a trap. If you buy right now, you just got trapped into into these high prices with high mortgage rates. Right now, home prices, they're overvalued, and mortgages are starting to creep up 7-8%, right? And that's a house of cards that will get toppled over. It's ready to blow over. Things are changing in this housing market. It's actually starting to shift, even in my area. My area had been very strong, but we're starting to see the buyers starting to pull back. I hope they hold up. I got another listing. I'd like to get it sold before the buyers go away completely. But if you're a buyer right now, you're falling into that trap. Now, my advice, if you don't have to buy, why not rent? It's about the third of the cost of buying in my area. In most areas, it's only about 50% the cost of buying, but right now would be a good time to rent. Now, I believe in real estate. Real estate's been my life. I'm a realtor, a broker, and I've done very well in real estate. It supported me all these years. But I can tell you, though, right now is not the time to be the buyer. Just my take. If you want to be a bag holder, go out and purchase a property. But you'll notice that a lot of people that bought properties are already selling them and going back to being a renter. Why? Because they can't afford home ownership. Home ownership is the least affordable it's ever been in the history of the world is right now. Okay, and even people that are paying rent, right? Rent's getting really tough to pay. 20% of people, that's 1 out of 5 renters, 1 out of every 5 renters is either skipping meals or selling their belongings to pay off the rent. They don't have the money for rent. Rent has gotten too high, and I believe that's going to come down along with the housing. And I believe that rent is actually going to be what leads the housing market lower. Now, you'll notice that the homeless population, well, at least in my area, just exploding. I mean, tent cities everywhere. homeless people everywhere. It's going up and up and up. That's one thing that the Moon Boys should bet on. Homelessness. People cannot afford housing anymore. Why? Because it's unaffordable. It's never been this unaffordable. People that think it's going to continue forever, I would tend to argue with them. I would say that they're wrong. But there are programs in place that are going to try to keep houses going higher. Main program the government's going to use is they're going to use inflation. I say inflation is still running above 10%. Your house didn't really go up much. It's just inflated. And in real terms, houses are actually starting to go down. But if you're rich and you have the assets to protect yourself, you don't mind a little bit of inflation. You even welcome it because you know you're going to be doing better than the average homeless man on the street. The average homeless guy, he's got no assets. Now, a lot of the homeless people, they still have jobs. In my area, we have the working homeless. They live in the campsites. They live in their car. I know several of them. I mean, they have jobs. One of them works at Tesla, but he can't afford to live indoors. So he lives at the campsite. He lives in his car when he's in the area. But that's just what we've come to as a country. And I think that a lot of people, they worry about it for their kids. Will their kids ever be able to buy a house? Not really. Not if we don't have the collapse that I'm talking about. And I think that collapse is coming. I think the reset is coming. But otherwise, no, your kids don't have a hope, right? I mean, they get out of college and yeah, they're making a little bit of money, right? But they can't buy a house because they're not making enough to buy a house with house prices this inflated and the interest rates, the mortgage rates this inflated. So what are they doing now? All right. So Fannie and Freddie, they come out with this program, Fannie Mae, Freddie Mac, right? They come out with the program that they want to get into the second mortgage market, the HELOC market, if you will, and get people to tap into their equity. What they want you to do is to tap the equity you have in your house and go out and maybe buy some Bitcoin, right? Maybe go down to the local casino, do some gambling. But they want you to get that equity out of your house. But they don't want to put that, they don't want the people responsible being the banking system. So Fannie and Freddie are going to do it, right? They're quasi-government agencies. Now, what does that mean? That means that me and you are going to get to pay for it when it all comes tumbling down. They're going to make $1 trillion. $2 trillion, $3 trillion in second mortgage loans in the form of HELOC loans to people so that they can tap that equity out of their home. And then when it all comes crumbling down, the bailout will come from me and you because that's what they're trying to do. They're trying to shift the liability from the banking system to the taxpayer, the many. So they're trying to get everybody to chip in to pay for when the housing market finally comes crashing down. And take my word for it, it's finally going to come crashing down. Now, we've learned nothing from the old 2008 financial crisis, right? I mean, 2008, people, you could get a loan if you were breathing. You were breathing, you walk into the bank and say, I want a loan, they give you the loan, right? I mean, I was selling houses to anybody. I mean, these people, they didn't have the income to afford the house, but the bank would give them the money. So I sold them the house. Well, a lot of those houses went bank to the bank, right? I mean, I know them. I saw them. I sold them. They ended up giving the house back to the bank. And the banks this time, they're a little bit smarter. They're not making these risky loans. So who's making the risky loans? Well, it's these non-bank mortgage companies. Think like a Rocket Mortgage, for example. They would be one of them. There's many of these companies out there. They make loans. They make these risky loans. They make most of the loans where people have a FICO score below 620 and below. Can you believe that? They can go out and still get a house loan? Not from the banks. These are non-bank mortgage companies. These are companies that are not regulated. Now, what do these companies do with these loans? Well, they bundle them up, right? They bundle them up and they sell them to your pension plan, right? So your pension has them now, right? They sell them to insurance companies. So your insurance companies have these bundled up. They sell them to Wall Street. Although Wall Street is getting a little smarter, they don't want to buy these anymore, but they put them in bundles. And these people with credit scores of 620 and below, now maybe they throw someone in with a 700 credit score to get it all good. Now, back in 2008 times, everybody was getting these stamped AAA rated, right? I mean, that's what Moody's was stamping these packages, these bundles of mortgage-backed securities. Now, some are commercial. That's another whole industry that's fallen apart quickly. But these mortgage-backed securities, they bundle them up and they sell them to everybody. They sell them to the pensions and insurance companies. They sell them to the banks. They sell them to everybody, right? Once they bundle them. These are tradable assets, right? But what happens when people stop paying on those assets? Well, you see, the mark to market is really bad. Okay, let's say your pension fund goes out and buys $100 million of this package, right? And all of a sudden the people with these 620 credit scores, they can't make the payments anymore. Well, what happens to that bundle of the $100 million worth of these loans? Well, it drops, and it drops really quick because it's not liquid, right? So they lose 60%, 70% of that. And all of a sudden the $100 million turns into $30 million, and all of a sudden you're not getting your pension. Well, that sounds really bad. It is going to be really bad. I'm telling you, I don't know exactly when it's going to happen, but I know once it does happen, it's too late to protect yourself, because when this does blow, you're going to see the whole house of cards coming down. I keep saying real estate's going to go down by 40%. Residential homes, right? 40% drop, and I firmly believe that. Do I know exactly when that's going to happen? No, nobody does. I can't tell you that. But the reason I think it's going to come down like that is because everything's going to come down together, right? You're going to see the stock market going down at the same time as houses going down. Now, the last time in the financial crisis, the stock market went down first. People got their money out of that and they pumped it into the real estate market, which sent it up. But when everything starts falling together, you're going to have a pretty big drop. And once again, we never let it completely flush out in 2008. We only dropped 34%, where the Fed came in. They said, look, we have this plan. We're going to print trillions and trillions of dollars to reinflate the real estate bubble. And they did a really good job of it. Is it going to hold on? Is the bubble going to hold on? Every bubble in the history of the world always pops, and this bubble will be no different. Now, exactly how it's going to pop will probably be different than 2008. I think it'll pop because the banking system will go down. I think the financial crisis that's coming will freeze up mortgages to where people cannot get a mortgage to buy your house. When people can't get a mortgage to buy your house, houses will drop by 40%. Might be very, very conservative, but that's just my take. I don't mean to scare anybody on Memorial Day in particular, but my take is that the banking system's going to freeze up. Now, maybe we have a sovereign debt crisis. Our debt is exploding higher, and they have to keep doing it at a faster and faster rate. They got to get a bigger and bigger number out there. 35 trillion right now, 120 trillion unfunded liabilities. But they got to get this number much bigger. 35 trillion in debt is not nearly big enough. They have to at least double that up to 60 or 70 trillion just to keep the Ponzi scheme going. And this is a Ponzi scheme. It's a Ponzi scheme being run by the government. Government has a lot of Ponzi schemes going on right now. They don't have the money that you paid in Social Security. They've stolen that money and spent it. There's no money for Social Security. That's another Ponzi scheme, but they just keep printing money and they keep increasing our debt. And eventually someone's going to have to pay for it. You wonder if your children can buy a house. Probably not. This is going to come tumbling down on them. We spent all the money, us boomer generation, right? We lived a very good life from 1980 onward. Man, we've had a good life. We've outlived what we took in, right? I mean, we spent an extra 35 trillion, and people don't even know how much a trillion is. It's a lot of money, I'll tell you that. But okay, so we spent 35 of them. Now, who's responsible? The younger generations are going to have to figure out how to clean up our mess, and we'll see if they can do it. Maybe they're a lot smarter than me. I hope they are. I hope they go back to a sound financial system that starts with sound money. Gold and silver would be sound money, worked for thousands and thousands of years. This is the only time in the history of the world where every currency in the world is a fiat currency. Every currency. No one has any gold-backed security anymore because all the money would be flooding that. But everybody, governments like to print money. There is no gold-backed securities. Every currency in the world is now fiat currency. It is inevitable that this will come crashing down. Now, at some point, it just doesn't work. You cannot print your way to prosperity. A lot of countries have tried. They tried to print their way, and they end up like Zimbabwe. They end up like Weimar Germany. You cannot print your way to prosperity. The debt is not what is a production of goods and services. Debt is not a good or service. It is debt. It is the opposite. We used to be a wealth-based society. Now we are a debt-based society. We went from extreme wealth to extreme debt. This will not end well. I don't know when, but I do know it will not end well. Now that's just my take. Now, okay. Now on the national average, right? Okay, household purchasing power has eroded. It's eroded. It's gone away, right? In 2019, you got to go back before the pandemic, before they added 40% to the money supply. But in 2019, 94% of U.S. counties in the U.S. could afford, 94% of them that median priced income could afford the median priced home. Now, where's it at now? Well below 60%. Why? Because we printed 40% more to the money supply. So this has eroded your purchasing power. This is not going to end well. The dream has become a nightmare. The coming crash in the housing market is going to be horrific. There's going to be a rug pull like you've never seen before. And in my lifetime, it'll be the biggest rug pull I've ever seen, and I don't think we're coming right out of it. I don't think we'll get out of it in 3 years, 5 years. I think it's going to take 10, maybe even 20 years to get out of it once the rug is pulled out. The time to prepare is right now. Now, maybe they have a plan to keep everything propped up. Maybe Biden's going to be the answer. I don't think so, though. I'd get some gold, get some silver. They're on sale right now. This is just my take. You do you. I'll do me. If you want to go buy a house, thumbs up to you. You want to stay in the stock market? I hope it goes to you. The Moon Boys love the stock market. Anyways, I got a little carried away. It's Memorial Day. I hope you're out there having fun. When you get back in, I hope you just watch this. Give me the thumbs up. Why not? Punch the subscribe button. Get out there, everybody. Have a great day. Bye-bye now.